And hello world, it's Lee here from Beach City, coming to you live from RocketSpace. And I'm here with Duncan Logan, CEO of RocketSpace. Welcome to Beach City, Duncan.
Thanks for having me. Yeah, this is great to have you guys here.
It's great to
It's been a long time coming.
It has been a long time coming, and I was determined this time when we got here, and I was going to be here, that we were going to try and get together. And we've struggled a little bit over the last couple of days to do that, but we've made it. So, for those that don't know about RocketSpace, can you tell us just first of all a bit of the background and how RocketSpace started? I know you and I got a connection with Angus, and Angus has told me the story, but I'd like to hear it from you.
No, so I'm originally Scottish.
You still are Scottish.
Still, yeah. Originally, I still am.
Yeah.
But yeah, I moved across here to the Bay Area in 2011, and actually 2008. Started RocketSpace in 2011, and back then the idea was just really, it was obvious that Mark Andreessen had made this comment of software's eating the world. It was obvious we're going to see this kind of enormous explosion of both tech and entrepreneurship. And I just wanted to be, in the modern day world, what was going to be the nucleus of that? As we started to see these tech ecosystems grow, what would be the modern day stock exchange of tech, if you like? And that was the idea for RocketSpace. So we set it up, and at the very beginning, there was just a couple of us in this kind of warehouse just about 5 blocks from here. But those couple of us were Spotify, Uber, Leapmotion, and it just grew from there, that this became this kind of center of excellence around building startups. And very quickly we said, okay, if you're not a tech company, you can't get in. If you haven't raised a round of funding, you can't get in. But the harder we made it for people to get in, the more people wanted to be in there, that old story.
Yep.
And so, it just grew from there. It's been great.
And so when you say it grew from there, where is it at now? Like what?
Yeah, so we have about 100,000 square feet here in San Francisco. We've got about 100,000 square feet in London. And there are two core focuses. The UK is my home nation, if you like. And the business has really evolved around two things: the startups, and what we would say is high quality startups, and then us helping them scale, get capital, meet the network, meet the ecosystem here. So a lot of overseas companies come to RocketSpace, and then we'll plug them into the venture capital community or the corporate community and so forth. That represents half the business. The other half of the business is corporates. So corporates from Coca-Cola to Nestle to Grain Corp out of Australia to British Airways, JetBlue, all sorts of corporations from around the world that are looking for innovation. And we've seen this kind of marketplace form between corporates with scale and access to customers, and then startups with innovation, and we're bridging that relationship.
Right. And so you mentioned that there's a criteria to get in, and it's pretty tight. So what is apart from the things you mentioned?
Well, it's really, I have nothing against people who want to build a lifestyle business. 3 people leave a PR firm, they want to set up their own PR firm. Great, that's a great business, and people should do that. We're looking for people who are really trying to change the world, and are going to need a lot of capital. And once you take in capital, once you have external investors, it's a different game. You got to deliver a return for them. They're going to put you under pressure. You got to get on. Speed becomes important. All these different things. And so we just made that differentiation that we want people who are trying to change the world. And so we have that criteria. If you haven't raised money yet, it's either because you don't need to and you don't want to, which is fine, or you haven't yet found that product market fit, or that assurance to raise money. So by putting in that barrier, we've managed to kind of raise the quality, and good people want to be around other good people.
Yeah. So one of the things that's a key differentiator from my mind between the investors in Australia and here is that they want growth here, and growth first, and that's sort of the main aim of the game. Obviously, you have to come to profitability at some stage, right? Yeah. But in Australia, it's very much still around EBITDA. When you're going to be profitable. So two different ways to approach it. But, are either of them right or wrong?
I think it really depends on. Every company depends on market. It depends on the total customer value, these sort of things. So, there's a lot of companies who will remain unprofitable in America because there's there's such good access to capital. It's a winner-take-all market. You know, even if you look at people like Uber and so forth, I mean, they have spent billions of dollars and still not reached profitability. But if they can control that market, the profits will come. And people like Facebook showed that, and other, you know, Amazon and these sort of people. So there's an appetite for that here. And I think in a smaller economy, whether it's Australia or UK, Canada or whatever, you got to start looking at when does the maturity model of that business kind of come together, and that's where you might say, we'll still invest in them, but we want you to run, you know, almost near profitability, because we don't know if there's going to be that much more capital to come in. Yeah.
And so what are you seeing in the corporate innovation space? I mean, again, my observation from the Australian market is it's been a bit of a gold rush. The corporates go, we've got to be in this space. They go and throw a heap of money at it, and before you know it, they're shutting down their accelerator or their incubator or whatever.
I think, like any industry, there's a maturity curve that comes across it. You know, we here sitting in the Valley, every corporate and their dog wanted to open an accelerator, wants to have a fund, wants to get going on this. And actually, corporate venture capital has really exploded. You know, it probably represents 40% of all capital now in the Valley, which is, you know, which is significant when you think of it. Yeah. But what we're seeing now is there's a maturity curve right across. And at the end of the day, the people at the mature end of the maturity curve, I'd put Salesforce in there, Intel, Google. You know, they're using CVC as a taster for an M&A program. Right. And as you shift from an industrial mindset to a digital mindset, you're shifting from, you know, capitalism to talentism. You're shifting from building everything in your in-house R&D to open innovation, where you'll go into the startup market and buy the innovation, just acquire it. Right. So that's a market we're seeing really move quickly. We have 160 Fortune 1000 corporates that we work with now, and they're all at different stages along that maturity curve. But it's great for startups. It creates a much bigger market, a much bigger exit market for startups. I think it's changed the whole dynamic. The idea that corporates have to build, they'll innovate around their core in their R&D labs, but all their adjacent innovation and disruptive innovation is going to come from third parties.
Yeah, that's amazing. 40%. That's significant, right? So I guess the other thing is the increasing returns economics that's at play. You know, the winner takes all market, and speed. Speed is everything. And see a lot of companies that are sort of saying, oh, well, we'll start in Australia, we'll start in Sydney, and then we'll expand to Melbourne. And there's certainly a mantra that is, you know, we've got to go global from day one. From an Australian perspective, we've got a fairly small market. We're 22, 23 million people. We need to be looking to go global from day one, in my view, and it's got to be fairly quick. To do that, you need to access large amounts of capital. And to do that, they need to be looking at external markets. And that's a challenge in Australia. So, I mean, what's your thoughts around that?
So, I think you got to be careful, because we get a lot of companies that come to that haven't managed to raise money in Australia or Canada or wherever, and they think, oh, I'll come to the Valley and I'll be able to raise money there. There's a lot more money there. There is a lot more money here, but there's a lot more competition. And it is hard to get a startup going here. And my advice to Australian startups is get going in Australia, get that traction, get that first validation. Then you've got, you know, because it's almost going to be easier there. You're not going to be fighting for talent. You're not going to be fighting for, you know, attention and all the rest of it. Get it going there. Use local press as a local success story and so forth. And once you've got that bit of traction, that's when you come across and kind of leverage the traction you've got in Australia, and then leverage the capital that's here. But keep a base in Australia. Don't, you know, that's a real asset.
Look after the foundation.
Look after the foundation, because it is so expensive here, you know, and sure, you're going to have to put a founder here and probably some biz dev people, and you want to go out there and capture, but if you can keep your dev team back in Australia, you're going to get more dedicated people, you're going to get more, you know, more community feel, better culture probably. Here, there's a lot of talent, but it's Machiavellian. They're like they want their options, they want their warrants, so you got to pay them a fortune, and then as soon as they're on to the next gig, and there's people who are millionaires just by doing that strategy. So it's a tough market here to build a cohesive company, and it's expensive here. So I think coming here before you've got validation, you're stepping into a snake pit. Get that done back home, and then when it is just capital you need, that's when you come.
So I think the thing that strikes me about RocketSpace is that it's more of an ecosystem in its own right. You've got access to corporates, and which is like what's better than investor in my mind as a customer. So you can bring those corporates into it. You've got the facilities, which is, I mean, co-working's co-working, isn't it?
Yeah, I mean, I think of it as office as a service. Everything now, software's gone to SaaS, hardware's gone to the cloud, office. What we're kind of venturing into is sort of office hospitality, in that we just want to take all of that off, take that off your plate. You don't have to worry about it. Right. It's totally flexible. But the most important thing here is we want you to be surrounded by like-minded people, and there is no doubt young companies are like young people. You are a product of your environment. I always think the hardest job in the world is to be the first unicorn in any city or country, because there's no ecosystem around you to help that happen. But here, there's so many law firms know what building a unicorn comes out. So many accounting firms, recruitment firms, other founders. It's. I'm not saying it's easy. Don't get me wrong. No. It's never easy. But there's so much more chance. It takes a village to make a unicorn. It's not just a founder and a team. You need the whole thing.
It takes a village to make a unicorn. Takes an ecosystem. Well, it does.
Takes an ecosystem to build it, without a doubt. So when you hear of these, the first one in some incredible place, I'm just like, wow. Hats off to you guys, because you worked out how to do that without the ecosystem, which is, I think, 100 times harder.
And so obviously RocketSpace is growing, and you're growing globally. You've raised a couple of rounds yourself. I think you just did a B round. Is that right?
We did we're in the middle of our C. So we did our B 18 months ago, 16 months ago, something like that.
Long ago.
Yeah,
Time flies.
I know, and money definitely flies. We're today we're in San Francisco and London. We have 2 operations in China. China's been a fascinating marketplace for us. I think it's in some regards it's innovating faster than the UK. We've got our eyes on Australia. We've got our eyes on Canada. Just the language. I mean, once you go to China, you're like, where speaks English? It's like it's not where the market is. It's just like, oh my God, what on earth do we do? Let's just go to the English speaking world.
Make it easy for ourselves, right.
Exactly. Australia. I think Australia's got a great. There's a lot of people doing really cool stuff in Australia, and not just in Sydney and Melbourne, but much further afield there. And it's an educated workforce. It's an adopter of innovation. It's a great market. And you say it's a small economy or a small population, but the internet, you can sell books online from anywhere to anywhere. You can sell tech.
Of course you can. But I mean, there's certainly challenges there's definitely a global market. But I think that some of the early stage companies, certainly that I've had experience in talking to, are very sort of myopic in their approach. So we're going to go to Brisbane, then we're going to go to Sydney, and I'm thinking, well, I'll start in Sydney, but let's go to Hong Kong or maybe not China.
Well, I think it's. It depends on the product. It depends on the service. If you're B2C, B2B, whatever. But there are so many people who have managed to do amazing things domiciled out of a small economy, because they may operate there, and I think there's a lot of advantages that I covered earlier. But they're selling 80% abroad or whatever out there over the internet. Yeah.
So you're going halfway through your C, so you're looking obviously to close that round out, and then expansion continues, or consolidating markets that you're in.
I think there's kind of 2 things to look at there. RocketSpace is now 7 years old, and I took take a kind of a lot of comfort reading amazing books like Shoe Dog, which is about Nike. You know, Nike took 10 years before they got anywhere. Right. You know, right? Amazon took forever until, and I think we've taken a bit of time to find our feet on what that working ecosystem does. I think there's another component to our business we want to add, which is capital, having our own funds to actually invest, and we're working on that. I think, you know, once we get the kind of ship fully made here, then we'll start looking at more aggressive expansion around the world. But at the moment, it's really how can we be 10x better than anyone else trying to do what we're trying to do. Because I think there's a lot of people, you know, there's a lot of incubators, accelerators, co-working, you know, in that mosh pit, if you like, and it's how do we get ourselves head and shoulders above the competition that people are just like, wow, this is so valuable. You know, such a great program, and I think we're getting there. And as soon as we get there, that's when you kind of really roll it out.
Yeah, so it's a bit like the well, I mean, you know, Australian ecosystem's been a bit of a gold rush. Every man and his dog's got an incubator. There's co-working spaces. It's almost like, you know, have we got enough startups here to support all of this? That's the question.
And co-working hasn't started yet. I mean, 1% of all commercial real estate is now in a office as a service market. The growth part of that is just coming. Now we're seeing the Blackstones, the Boston Properties, these enormous players coming into that market. So if you're just in pure co-working, you've had the best days are behind you, because the big guys are coming into that market. So we definitely, you know, we've never wanted to be pure co-working. We've never wanted to play in that. We're, you know, it's just not my passion. My passion is startups and tech. And so we want to get deeper to the tech, more valuable to the tech and to the startup piece, and then grow that out.
Yeah. Duncan, been a pleasure. I'm glad we finally got to interview you. So thanks for spending the time to talk with us today, and keep watching Beach City on Facebook, Beach City Live, and check us out on YouTube at Beach City. Duncan, thanks, mate. Pleasure. Cheers.